Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, June the 26th, the year 2018. Let's talk trading. Why you are not getting better at trading, part 19. I don't know how many parts they're going to be. It seems like when I get down to my last idea or two, I get a couple of more. So we'll just keep going. Now, I may have mentioned this once before, but I think I'm going to come at it from a slightly different angle. And that is, you have to stop looking outside yourself to get better at trading because we're talking about practicing, okay? Because when you look outside yourself, you then put yourself in a position that is susceptible to market forces. I mean, before running this or starting this video, I was looking through my email and I saw all of these people trying to sell me these seminars and these new indicators. But you see, I know if I'm going to get better at trading, if I'm going to improve, if I'm going to incrementally improve, it's not by adding more indicators or changing indicators or systems or methods. Not at all. It's going to be taking a look at the mirror. It's going to be taking a look inside of me and finding out what I can improve on, my weaknesses as well as my strengths. What can I do to get just a little bit better each and every trading day? And so that's what I want you to do. Is that I want you to take that look inside. Forget about all the noise outside and just say, you know what? It's up to me. Because no matter what, somebody's out there is going to be bigger, better, faster, smarter, have better information, better access, more money, faster computers. It doesn't matter. You have to look inside. What can you do to make yourself better? So when the next time you press the button, you have a much better chance at having a positive outcome. And along those lines, about looking inside, you need to trade the trade that you're trading, not the last trade. Because you see, if you let that last trade and the outcome of that last trade influence what you're doing this trade, chances are you might have a disastrous result. Because you see, losers are going to make you timid. You click the mouse when you got that signal, your setup was there, and it went against you. So the next time you go to do it, you might just hesitate just enough, or you might just pass on that trade. And in either case, you miss out. Because instead of focusing on this trade, you were thinking about the last trade. On the other hand, if the last trade was a winner, you were profitable, especially if it was a big, nice, juicy, fat profit. Winners can make you sloppy and lazy. Because you had such a great win, it's just like, oh, well, maybe you have that house money mentality. Or maybe you, instead of doing all 5 steps, you only do 3 of your plan. You don't do that same work that you did before the big win on the next trade. So no matter what that last trade was, forget about it. Okay? Go through your steps, each and every trade. So let's move on. And one of those steps is the money and risk management. You knew that was coming. Looking at the monthly, we can see the dollar yen is still within the upper wick zone there. When we look at the weekly, you see here we turned green, had a nice reversal. And we've got one pair that hasn't filled, all the rest filled. On the daily, you see it came down and basically had, what was that, a double bottom right there? We reversed up in the positive territory here. But you can see not much range, only two over 100. Actually, this one's right at 100, slightly over by a point or two. Looking at the buy zone, as you can see here, we had a short trigger, just profit from the get-go. Fade to the pivot was profitable right out the bat. Right here we had a buy zone trigger, and it was very profitable. I had somebody recently ask about the buy zone and setting the, how to calculate the buy zone. It's real simple. You run a frequency distribution. You say, okay, how many times does high minus open, is it say 0 to 2, 2 to 4, 4 to 6, or whatever parameters you want. And then what'll happen is the curve will probably go like this, flatten out, and then spike. That's what you want to look for. So basically, it says if it goes X number of pips, then chances are it's going to go Y number of pips. So the way it worked in stocks is anything 0 to 9, that was a throwaway. You just don't trade it in that. But if it hit between 10 and 20 cents, that was your entry. And if it usually hit between 10 and 20 cents, 80 times or more out of the last 100 days, it hit 50 cents or more. So basically, you were looking to capture somewhere between 20 to 30 or more cents of profit. Now, with the buy zone here, I mean, you can think of the average range. There usually it's about 60, 70, 80, I think, on the yen right now. I haven't even looked at the average range, tell you the truth, lately. But I know usually if it goes between 8 and 10 pips, it's going to go more. It just is before the end of the day. Yeah, sometimes it could be some chop and you might get stopped out, but that's trading. I mean, here today, here was another trade right there. This one here, there's a nice one. Right here, you're in the short zone. Came back down. You can see it's coming back. Once it exited this wick zone, you should have just taken your 1 or 2 pip profit and been done for that trade. Ditto here, you see, same thing right there. And this is how, what I talked to the trader about, kind of overlapping strategies. So we're doing the buy zone, but we look at the wicks here of the hourly candles to give us a clue, or you can use 15-minute candles or 5-minute candles, but you look to the wicks to give you a clue which way price is moving. It's real simple. So is it going against you or is it going for you? So, as the Mighty One would say, shout out to you, Mighty Joe. We're looking bodies in the direction of profit, wicks in the direction of loss. Okay? That's just the way it works. And here we can see green rat, red rat, here, rat reversal trade. There was a trigger right there. You could take the highest M15 open trade right there as opposed to the holo highest H1 open. But those were two ways to enter in that rat zone. You can see here almost to R1, bounced off of yesterday's high, bounced off of yesterday's low. Actually, it slightly penetrated yesterday's high. But yesterday's low, I think it didn't quite get through it. But you can see prices pretty much contained in yesterday's daily range. Pivot once again taken out. And you can see here, we've only got 5 missed pivots. Once again, highly profitable. Looking here, we got a new hour. We've got a 3 ball. So we want to go short at the line off of that 3. It says do not short. Why? Because this is green. Plus you can see here we got buying going on. There was a ton of selling there, 260 ticks. You know, it's funny, I talked about indicators. Some guys talking about they've got the new best secret proprietary range bar. It only prints a bar, you know, when price moves 10 pips, another additional 10 pips. I just have to laugh. You see these lines on the sweet spots indicator? These are every 10 pips. So right here, I can see here's a range of 10. So it's either here or it's, you know, goes up the ladder or it comes down the ladder or the steps, whatever you want to call it. But it's just that simple. I mean, I don't need anything fancy. Just horizontal lines every 10 pips and I can see what price is doing. I don't need special range bars. And besides, this, you know, I can look at, you know, my spread dots telling me the ticks here. So I can see how many ticks are buying, how many ticks are selling based on the simple formula. And that's it. That's all I need. You know, I don't need some fancy dancy range. That's why I say I don't need anything external. You can look to the inside. What do I have to do? I just need to trade at the line, you know, using what I have on my screen, going with the H1 candle color. I mean, if you had nothing, no indicators on the screen and you just traded with the H1 candle color, I've already proved through statistics and frequency distributions, you've got a winner. Okay, once again, H1 candle color at the line, you can see the wins. I don't have to beat that dead horse, right? Once again, close open on the weekly, close open on the monthly, you can see the kind of pips you can make trading at those levels. Wick zones, once again, yesterday, not much distance between the wick zones. Prices staying in the wick zones most of the day because of this, but you can see it's poked out a couple of times. There are certain days that are just not conducive to certain methods. And you have to trade what you see. And here we've got the holo set up right there, 109.87. Should probably just click sell, shouldn't I? Moving through, you can see here on the tick, wavering here, crossing back and forth. Right here, we've got an inventory reduction bar on the H4 at 187, corresponding to a holo. That seems like it'd be a good place to go short. Daily, weekly, monthly, we can see the open right here. Daily, weekly, open. Einstein line, here we go. It called it short since I turned it on, and you can see nothing fancy. Just this is when I started trading. Everything's relative to that point. So price is going down, price is going down. It's I have to laugh. And just looking here at these the the high and the low lines showing me which way price is moving. So remember, fellow traders, Look inside, not outside, because it's not what you trade, it's how you trade it. Drain the